We are back with another deal of the week breakdown review. This time it's a lot more detailed for you guys. I literally wrote absolutely everything down for these deals. The only thing that's missing and what I really want to get for you guys is revenue numbers from my clients. But the thing is that because I'm talking about deals that are closing, oftentimes I don't have 100% of all the revenue numbers of everything that's happening with these deals outside of like projections. And so I mainly want to continue to take and post this content for you guys for us to talk about what are the things that are actually working, what are the things that people are doing, and how are we able to make these deals work, but while limiting how much money you're spending out of pocket. That's ultimately the goal. You guys know that I preach this. I'm always saying, let's find a way to get you into the property with the lowest amount of money out of pocket possible. So I'm going to explain to you the way that my clients are able to do the same exact thing. And let's jump right into it. This property is in Atlanta, Georgia. We have a single family house. And so like this property is a kind of a brand new remodeled single family property. Property is in Atlanta, Georgia. Completely remodeled. The house is going to be set up as a long-term rental, primarily just because the numbers were able to work out on this deal, and that is what this client was looking for, was for a long-term rental. So Atlanta, Georgia, I truly love the Atlanta market in general, just because Atlanta has commercial properties, it has value add for fix and flip, it has long-term rentals, and it has short-term rentals. It's one of the few markets that actually has a lot of different investment types, investment vehicle types that you could get yourself into. That's honestly what I love about Atlanta. My realtor partner in Atlanta, he and I do a lot of deals together. Every year we're doing like 15 to 20 million just in Atlanta, just in the state of Georgia. And so there's always a lot of deals to be found in Georgia. And the thing for me and the beauty for me is I get to have a really cool bird's eye view on like, where are my clients going? Where are they taking their deals? And how are they finding these properties? So this one was through a Realtor Connect, and I was able to help them get across the finish line. It didn't have any square footage, so I don't have the lot size square footage for this property, but it was 2,100 square feet of living space. It's a 4-bedroom, 3-bathroom house, fully remodeled. It was really not on the market for that long. I don't have the specific days. I know that it took us about 25 days to close the deal, and so time frame wise, it was on the market for a little bit of time. Most houses, from what I've seen though, have been sitting on the market for like 30 to 60 days on average. That tends to be where most of the properties are kind of landing right now. We structured this as a conventional loan. It was relatively simple as far as like the actual financing itself. So we did this as conventional financing. Purchase price on this deal was $410,000. So that was purchase price. We did conventional financing. Now, I always talk about conventional financing primarily because of the fact that conventional is one of the loan programs that allows you to get into a property with the lowest amount of money out of pocket. When we look at conventional financing, you're essentially having 3 different types of occupancy types that you can declare, which essentially just change your down payment. So you have a 5% down payment if you're buying it as a primary. If you're a first-time home buyer, you actually get a 3% down first-time home buyer incentive. You also have a 10% down vacation home, which we use most frequently for our clients buying investment properties that are going to be Airbnbs. And then third, we have 15% down, which is an investment property. And so in this deal, we ended up doing a 15% down payment. That was primarily because we knew they wanted to set this up as a long-term rental. So that was essentially the reason why we set it up that way. We did $410K purchase price. Total down payment ended up coming out to be $61,500. So that was essentially the total out-of-pocket cost. One of the things that I recommended to this client ahead of time, which if you guys have watched my other Deal of the Week videos, first of all, if you haven't, you should go watch them because we talk about a lot of different stuff in these different Deal of the Week breakdowns. But one of the things that I'm always preaching is trying to negotiate money for seller credits. And this client was actually able to negotiate $7,200 in seller credits, which seller credits, we always talk about ways that we can use it for other out-of-pocket costs, right? Like covering closing costs, covering everything else. And that was kind of the structure in this situation. Ended up doing $7,200 to cover some of the closing costs. Total loan that we ended up getting on this house was $348,500, right? That's after the sales price minus the down payment. Interest rate on this was a 7.5%, which I would say is relatively accurate for where we've been for the market. Like the market has been kind of in flux in the last couple of months, a lot of uncertainty, but rates really haven't fluctuated tremendously. And this was on a 30-year fixed. I do have clients that have been doing adjustable rate mortgages. And the thing is, though, that adjustable rate mortgages aren't always super competitive. A lot of banks, what they'll do is they'll actually make the pricing worse on adjustable rate mortgages because they don't want people to take out those mortgages. They just want them to do a 30-year fixed. So that ends up being the situation sometimes. Principal and interest payment. So just principal and interest of the actual loan itself. P plus I, that came out to be $24.36 with 77 cents. And then we had homeowners insurance, property taxes, as well as PMI. So HOI, or as what we call homeowners insurance, which is just the insurance policy you have to have on this house in order to close, came in at 110. With some cents, 61 cents. And then we had property taxes. Now, typically what we do for property taxes, like depending on the state where you're purchasing, we always use like an estimate, right? Now, in the state of Georgia, we typically use 1% to estimate for property taxes, like 1% of your purchase price. Low in the situation to be $4,100, right? Because sales price was $410. And then we divide that by 12 to get the monthly. But this one total came out to be $345.91. And then we had PMI, which came out to be $119.07. So total payment on this came out to be $3,012. So that's his total. I know from what I've spoken to with the client that their plan on this is to turn this property into a house hack for an investment property, and they plan to be able to cover the mortgage payment and do more than that. He also was kind of throwing around the idea of doing it as a short-term rental. And like we always talk about, it's one of those things where you have the ability to do an STR. And I always say, like, if for my clients who are looking for STRs, find a property that is an STR that you think can also work as a long-term rental. Because if you're doing one as an STR and whatever happens and the situation changes, the market changes, the regulations change, the city changes rules, whatever the case might be, you have the ability to move that property to be a long-term rental. Now, total closing costs on this, which didn't account for the credits that we're talking about here, was just under $21,000. It was at $20,922. Now, during the time of the year when this client purchased, it's actually more expensive on closing costs because of the escrows. And so escrows is something that when you purchase a property, the bank is actually going to require you hold money for property taxes as well as homeowners insurance. And they require you to put that money into a bank account essentially with the bank. And what they do is they make those payments for you when that bill becomes due. And that just ends up making it a little bit higher sometimes depending on the time of year when someone's closing. It can actually make it more expensive. They're requiring more money for insurance. They're requiring more money for property taxes. And so then you end up having to put that money in there, and it's like kind of future money that you're paying. It's not really part of closing costs. It is because you're spending it out of pocket, but it's not because it's future money that you would have paid anyways, if that makes sense. And then we also accounted for seller credits, right? So we had $7,200 in seller credits. One other thing that is important to note here is there's something on your documentation when you close on a property called adjustments and other credits. Now, adjustments and other credits is essentially money that you're getting from the seller at closing, depending on the time of year. Similarly, because of property taxes or because of prepaid interest, there's other factors that can go into like money that the seller is technically paying. And so in this situation, it was $22.17 that they had. And so the total out of pocket ended up coming out to be $73,000, like pretty much $73,000 and $73,004 with 58 cents. So you can see here that like for this kind of structure, we were able to do a lower down payment. Initially, when this client came to me, they were actually thinking we were gonna have to do 20% down in order to qualify. And originally, I mean, they were just estimating it was going to be more money out of pocket for them. And it's one of those things that I know a lot of banks talk about needing to put 20 to 25% down to purchase investment properties when that's really not the case. It's just that that bank in particular might have a risk tolerance level where they don't want to do lower down payment loan programs. And so that is why I always basically say, it's important for us to pay attention to the different ways that we can scale a portfolio, the different ways that we can keep your money out of pocket as low as possible so that you can keep that money and keep reinvesting that into future deals. Now, I hope you guys found this deal of the week video informative. I'm going to continue to do these every single week for you guys. If you haven't seen my other deal of the week videos, please check those out either here or here. And I will hope to see you guys in the next deal of the week. I'll see you later. Still tuck open, they try